The European Central Bank keeps interest rates on hold and keeps markets on hold. Mario Draghi added barely any meat to the bones of the bank's bond buying programme, but he did appear to rule out the ECB taking a loss on any restructuring of its Greek bond holdings. Well, let's get out now to Philip Shaw. He's Chief Economist at Investec, joining us from the London Stock Exchange. Philip, nothing obvious jumped out from Draghi today. What was your main takeaway?
Well, certainly nothing too surprising in terms of the rate decision and the analysis on the economy. But what we did get from it was that the European Central Bank is taking a dim view of the recent inflation numbers. And Draghi admitted that there hadn't even been a discussion about a rate cut this time around, and that he did say that the ECB would be monitoring closely developments on prices and wages. So to our minds, that effectively rules out a cut in rates.
Until when? Sorry, you're saying that rules out a rate cut. You mean this year?
Yeah, no, we think that it's unlikely now that we'll get a reduction in the refi rate before the end of the year, and we've delayed our rate cut call now until the end of Q1 next year. For what, 25 or even 50 basis points? Well, we think what we're likely to get is a 25 basis point cut in the main refinancing rate to 50 basis points. And what the ECB will probably do, we think, is narrow the corridor by leaving, for example, the deposit rate at 0% rather than take it into negative territory. That's one thing that was, in the entire 50 minutes, 55 minutes of the press conference, it was barely mentioned, lowering the deposit rate to a negative rate. Why do you think that was? Well, I think there may be a feeling at the ECB that it wouldn't necessarily be a great thing to do. It would put a lot of pressure on money market funds. It arguably would cause some instability between the banks at the short end of the yield curve as well. And really, it didn't necessarily want to raise the subject in too much detail. OK, as I said in the intro there, he was quite blunt when asked if the ECB would consider a haircut on Greek bonds. He said no, that's because that would amount to monetary financing. How do you think that's going to go down in Berlin and Paris? Well, I suspect there's an ongoing conversation going on that subject. I guess the fact of the matter is that the Greek public finances are still unsustainable, and effectively there are parties looking for a restructuring in Greek debt. And obviously one of the easiest ways of doing that would be to give the ECB a haircut on its Greek bond holdings. The ECB, I think, will fight tooth and nail on that one, and it's not clear as to who's going to win. Well, if the ECB doesn't take a loss, the private sector holds barely any Greek bonds anymore. The governments are holding all the debt. It seems like the governments are going to, i.e. the Eurozone taxpayers, are going to have to wear that loss. Well, somehow or other, yeah, it's going to be the taxpayers that are going to be paying for any Greek restructuring. Certainly, yeah, government holdings would be part of the equation. Whether, as I say, the ECB will comply in the end, I don't know. We'll have to wait and see. On the subject of Spain, of course, he repeated that it's up to the government in Madrid to request aid. He was asked on the level of Spanish yields. He gave no comment. Were you surprised by that at all? Oh, not at all, no. The ECB, I would imagine, is fully expecting that Spain signs up to the OMT programme in due course, and that it will be buying bonds in the secondary market. So it's made it fairly clear that it doesn't want to publicise any sort of target for yields, and accordingly it's keeping very close to its chest what it thinks is a reasonable level of yields and what isn't. Well, and just on the bond buying, the OMT bond buying programme in general, he said that it's not a substitute for primary market access. Surely it is. Well, indirectly, absolutely. Obviously, I think the ECB is talking about not buying in the primary markets directly, although arguably the EFSF or the ESM would do at the same time. But yes, nor does it want nations to necessarily skew their issuance towards the short end of the yield curve, which then can be bought in secondary markets. OK, Philip, thanks very much. That was Philip Shaw, Chief Economist at Investec. That's all from us for now. I'm Jamie McGeever. This is Reuters.